Welcome to the ZipMoney Bid Proposal 2017. Today we'll be going through the summary of the bid proposal, providing an insightful glimpse into the opportunity that ZipMoney offers to you, Mr. and Mrs. ready to retire. Who is ZipMoney? ZipMoney is a financial services company operating in the retail finance sector, which aims to simplify how consumers pay. Through the use of easy-to-use, consumer-friendly, and financially responsible products, ZipMoney hopes to create transparency and simplicity in the market. As you can see, we currently have over 500,000 customers, 3,000 retailers, and $400 million in debt financing for our retail finance business. And of course, we are a publicly listed company. We represent a team advising Larry Diamond and Peter Gray, the CEO and COO and founders of ZipMoney. Why TargetCo? Our founders, Larry and Peter, are looking to expand the business, to diversify risk and expand into new opportunities, and ultimately find a new place to relocate ZipMoney head office.
Our team is comprised of myself, Jonathan Mudana, leading the emergency acquisition team.
Mohab Sukatanko, who's going to be doing economics and policy.
Leslie Angeles, Debt Capital Advisory.
Deborah Chin, who's doing real estate advisory.
Tia Chen, I'm doing the dues modeling.
Hi, I'm Deborah and I value both the Yummy Beer head office and the vacant land, and I'll explain to you why I believe we are giving you a great price for both the head office at $7,174,400 and the vacant land at $12,010,284, which is a combined total value of over $19 million. So for starters, you have a fantastic piece of land, brilliant location, waterfront with reasonably noticeable residential constructions being built around the area, and so we can assume that shops and amenities will soon follow. Having said that, the property might be contaminated due to the previous use of land, B manufacturing, which is of large concern as there is a high chance the proposed rezoning may not go ahead and we're left with an undevelopable piece of land. Also, the council approval won't be for another 3 years, which will add further risk to the outcome. Now I'll run you through on a high level of how we derive the value of both the Yummy Bee head office and the vacant land. So in regards to the Yummy Bee head office, we have a net leasable area of a bit over 1,000 square meters, and to determine the value of the head office, we have adopted a very generous rental rate of $610 per meter square. And the reason why it is generous is because 78 Wilsham Road, it's only renting out for about $580 per meter square, and they also have a very large open floor plan with similar net leasable area. 625 Little Road is a brand new building and they are only renting out for $600 per meter square, and we are giving you a value of $610 per meter square when valuing your property. The gross rental rate is the multiple of the net leasable area by the adopted rental rate, and the net rent is the gross rent minus the landlord outgoings, which is irrelevant as the landlord pays these. So these are things such as repairs, maintenance, insurance, council rates and land taxes. So the adopted capital rate or the yield is determined by comparing other office buildings similar in location to Yummy Beer's head office and the net income that it will generate. And so we consider factors such as market settlement, sellability, quality of the property and the tenants when we determine the yield. And the yield that we have determined is 7.81%. For the Yummy Bee vacant land, we have a subject site developable GFA upon council approval of 7,560 square meters, and this is with an FSR of 1.5. The area size developable GFA, the area size is the subject site developable GFA minus the office size. So with the adopted rate, this is how the developable land, referencing 5 comparable development sites that were recently sold close by. So that's a mixture of industrial zoning and the potential use for mixed zoning if the council approves the area in over 3 years' time. So within industrial zoning, we have looked at property 85 Hollywood Drive, close to where we are currently looking to purchase, has similar zoning and an FSR to Yummy Beer, and they are at the moment, their adopted rate is about 1,500 meters square, and we are valuing your property to be 1,650 meters square, which is substantially higher. For mixed-use zoning, we have come to the amount of 2,732 meters square, and this is by looking at 3 other properties that have already been approved for mixed zoning use, which includes 42 Kildare Road, 64 Douglas Street, and 252 Wetherall Avenue. So the adopted rate that we have concluded is a mixture of 80% chance of us being able to use the property for industrial use, and a 20% chance that potential uplift for mixed use. Okay, and so the vacant land, we have come to the conclusion, how we've calculated is the area size divided by the adopted rate, which gives us a value of 12,010,284. So in this case, we've given both the head office a higher market rental rate and also the vacant land a higher yield, as we factor in the possibility the council will approve the site for mixed use in the future. And that's why the value we are proposing to you is higher than what you will find on the market. Okay, that's it.
Hi, this is Jonathan from the Mergers and Acquisition team. So when we were evaluating Yummy Manufacturing, we decided obviously to focus on the manufacturing asset as one of the primary cases of value. That we found that the best way to find this value would be to obviously adopt an EBITDA that represented both the business as it currently was historically as it will be in the future. So we've adopted the forecasted year, 17, 8+4, having 4 months that have been forecasted. The reason behind this, obviously, as I've said, is that we'll be incorporating historic data as well as the future projected data and any associated costs with the actual acquisition of Yummy Manufacturing. So just to have a look at it, the original EBITDA for the month of, so for forecasted year 17 was 2.9 million. With that, we've made a few adjustments, just obviously factoring in the auditing process, transition and adjustment of senior management salaries, as well as incorporating ZipMoney's marketing and administration services as a capability to reduce costs. So what we've come to is an EBITDA adjusted of $3.14 million, and what we believe is obviously instead of relying on the original EBITDA, our client firmly believes in transparency and honesty to give you the confidence and for us to build a relationship in the future. So when it comes to valuing the Yummy Beer Manufacturing, we decided to focus on a top-down approach. So what that means for a business is we decided to focus on what does the broader market value breweries as a whole. With that, we focused on a sample group of information provided by Nominora between 2013 and 1999, which had every single acquisition within the brewing industry. What we found immediately was, in some cases, we had some larger businesses purchase multinationals from that 18.9 times EBITDA range to some of the smaller purchases by Carlsberg, which was at 6.9. In addition to this, as was saying, when we were obviously focusing on the broader market, we found that Yummy Beer is more of a boutique beer brand, so we had to find some similar cases that do actually value up and size up with the same business model. So what we decided to do is focus on some North American companies which were part of that boutique breweries. In addition to that, what we found was that the majority of these breweries, which we found to be as Boston Beer Co. and Craft Brewer Alliance, sat around that 12.2 mark to about 11.3 EBITDA range. We found that was more of a fair representation based on the size and the actual market that Yummy Beer actually shares. But to be in a fair consideration, we decided to include both the Nominora data set as well as these boutique beers to find a fair evaluation for Yummy Beer. By combining both sets of data, having an average of it all, we found that 11.61, as indicated on the screen, would be a fair value to evaluate the adjusted EBITDA and ultimately get to a round amount about $40 million for the Yummy Beer manufacturing side of the business. What we believe is, with this EBITDA value, ZipMoney firmly believes that Yummy Beer manufacturing as a whole business unit will continue to grow and prosper as it has done in the past. We have the uttermost confidence that this amount fairly values that. Thank you.
Hi, I am Mohak, and I will be talking about the economic policy and the government business case surrounding ZipMoney. The first question comes to mind is, why would the government first be interested or in this area? One main reason is Target Co actually owns a vacant land, and the vacant land is currently being underutilized in the CBD, in the Sydney CBD. Some of the problems that arise from that happening is there's major congestion in the CBD. For a 3-kilometer area, any vacant land is a cause for congestion. Another thing is, through investment in the vacant land, there could be increased property values for the surrounding areas as well as the area itself. The last thing is, an investment in the vacant land would decrease pollution, because we would utilize it. If in the next slides you will see what we would utilize it for, and you will see the benefits. So just some of the key benefit and the stakeholders for the vacant land would be the surrounding community, as they would experience increased property values for their properties. The government would get intangible benefits through development and investment and research and development. The daily commuters, who we actually plan to build a light rail in the vacant area, so daily commuters will also be a great stakeholder, and also all the staff involved in the project of the development. Okay, so just some of the main benefits from the development in the vacant land for ZipMoney. We could see that just for the city resident times, a building of a light rail there would actually increase would decrease transport times and ease congestion. Some of the operational benefits would be there will be a reduction in costs for residents and people in that immediate area. And if people can get to work quicker, there's always more productivity. It's better for the government. Also, lastly, environmental benefits, because we're opting to go for a light rail instead of a road or any other facets. The reason light rail will be so good is because it can transport about 13,000 passengers each way, so there's always less carbon emissions done with that. And lastly, with the planned light rail, we're estimating about 3,300 to about 5,000 jobs being created through the development investment in that vacant land. Thank you.
So I'm Blessy, and I am the Debt Advisory Specialist. So firstly, you all know that ZipMoney is a financial service company, and our focus is on disrupting traditional retail banking markets. So we primarily use debt and equity finance to fund our lending operations. So with this opportunity of Target Co, our debt and equity funding will assist us in offering you both a direct value payment of approximately $60 million and $356,000. So this is comprised of debt and equity finance. So with the equity finance, it is comprised of cash and the issuing of shares, whereas the debt finance involves issuing of bonds and the core debt facilities. So it is through our openness to share information with you all and our willingness to pay character due to our thriving business, along with Target Co's opportunity to allow us to take on security with our new venture. It will essentially assist us in getting the necessary core debt funding to supply you with the full value. So the lump sum payment will also give you both two benefits. So this lump sum payment will give you financial freedom to follow your own endeavors, as ZipMoney will assume all the risk in this new venture. So the risk involved, as previously mentioned by Debbie in this venture, is the contamination of the manufacturing site, in which ZipMoney is more than happy to and is willing to fix this site along with the vacant land, as it is a costly venture and it is currently not making any cash flow. Therefore, ZipMoney will assume all the expenses in relation to transforming this area to a residential area.
Hello, this is Will. Today I'm going to talk about the summary of our offering purchase to the Yummy Beer. Our purchase will be roughly divided into three parts. The first and the most important part definitely is the yummy beer manufacturing, which accounts for more than 65% into our total consideration. And second largest is the vacant land, which accounts for around 20% in our total consideration. And the last is the yummy beer head office, which accounts for 11% of our total consideration. And besides all of these three main parts, we still got this top-up value, which is said to be the premium to the market value of yummy beer. And in next slide, I will talk about how we can calculate all these three parts. Our total consideration is roughly divided into 1 to 3 parts. The top-up value is calculated by the yummy beer manufacturer. When we consider how to calculate these three values, we have to consider what's the components of these values. So we drive our trade into find the components of each part. When we calculate the yummy beer manufacturer, we want to calculate the enterprise value, which is calculated by the EBITDA multiple method. And the EBITDA multiple method, we have to calculate the EBITDA, which is based on our forecasted balance sheet. And then we have to estimate the EBITDA multiple, which is calculated as the average of the industry value. And in terms of calculating the vacant land value, we have to divide it into two parts. The first is the area size, which could furtherly be divided into two parts. The subject size developed with GFA and the office size footprint. And by backward calculations, we can calculate the vacant land. And last one is the yummy beer head office site, which is also calculated by the similar method as the vacant land value. And last part, I will talk about the top-up value. Top-up value is calculated as a proportion to the forecasted EBITDA of yummy beer manufacturer. Since we assume that top-up value as the percentages is a premium to the market value of yummy beer. And the premium is assumed to be the future profitability of yummy beer. And we assume it to be the average forecasted growth rate of EBITDA. Because this growth rate part is what we can see as the future profitability when we purchase yummy beer manufacturing. And as by calculation, the average forecasted growth rate of EBITDA is 37%, and the adjusted EBITDA is around 3 million. And finally, we calculate the top-up value as 1,170, and that's my part. Thank you.
Thank you, Blessy, Jonathan, and Will Mohan for your inputs. Mrs. and Mr. Ready to Retire, I want to reiterate a few key benefits of why ZipMoney's offer should be the offer you accept. Firstly, the prices we have presented to you today in respect to selling Target Co not only is fair, but extremely generous, as we have offered you an above market rate even after the state of the contaminated site and the high chance that rezoning will not be approved by the council. Secondly, through the use of debt and equity finance, this will be a direct value payment for the acquisition that will give you the financial freedom to follow your endeavours, whilst the equity portion will allow you to be a continued stakeholder and voice in the legacy you have built. Thirdly, ZipMoney's extensive network of in-store and online retailers will open new opportunities to expand the Yummy Beers market. Through the use of these channels, we believe within the next 6 months of the acquisition, Yummy Beers business could expand into the online alcohol sales and seize a significant portion of the market. And finally, in terms of the exit strategy of having both a debt and equity finance option, we believe that having the option to be a stakeholder in the future of the company will allow you to remain connected to your legacy. Thank you.